On January 30th, 2026, the precious metals markets were violently crushed. The action started Thursday evening, January 29th, and by Friday the 30th it was a full-blown collapse. In a matter of hours, after hitting a record peak of nearly $5,600 an ounce, gold plunged by over 10%. Silver was hit even harder. After touching an all-time high of nearly $122, it collapsed by more than 30%, its worst single-day drop since 1980. Trillions of dollars in paper valuation vanished from the global markets. The mainstream media and financial pundits scrambled for an explanation. They told you it was about the nomination of a new Fed chair. They told you it was just healthy profit-taking after an explosive rally. They told you this was a natural, inevitable correction. But if you own gold and silver, you've probably felt that there's more to the story. You suspect that the official narrative is, at best, incomplete. At worst, it's a deliberate lie designed to conceal what really happened. What if I told you that the crash on January 30th was not an accident? What if it was an engineered event, a coordinated takedown designed by the very forces that claim to stabilize our financial system? In the next few minutes, we're going to expose the mainstream lie, we're going to connect the dots and show you the evidence they don't want you to see, and most importantly, we will reveal the powerful, nearly 100% price explosion that happened right under everyone's noses, the one you were never supposed to see. Section 1. The deception dismantling the official story. Let's start by tearing apart the official story they fed you. The primary catalyst they claimed was the nomination of a well-known hawk like Kevin Warsh to be the next chairman of the Federal Reserve. A hawk is supposedly tougher on inflation, which would signal a stronger dollar, typically bad for gold, so traders sold off. The second reason given was simple profit-taking. After an incredible run-up where gold rose about 29.5% and silver by a staggering 68.5% in January alone, traders were simply cashing in their chips. Now, do these factors have an impact? Of course, but do they explain the sheer violence of the crash? Do they explain gold plunging by over $500 and silver collapsing from $121 to below $75 in a single session? No, that's not a correction. That's a controlled demolition. That's not profit-taking. It's a manufactured panic. Think about it. The fundamentals that drove precious metals to record highs hadn't vanished overnight. Geopolitical tensions were still simmering, the U.S. national debt was still spiraling out of control, central banks around the world were still buying gold at a historic pace, desperately trying to de-dollarize their reserves. So if the fundamental story was still bullish, why the historic crash? The answer is that this battle wasn't fought in the real world of physical supply and demand. It was a targeted assault that took place in the casino known as the paper market. The Fed nomination wasn't the cause of the crash. It was the cover story. It was the excuse the bullion banks and market manipulators needed to launch their attack. So how do they get away with this? How can a small group of powerful players dictate the price of a multi-trillion-dollar global asset? To get it, you need to understand the dirty secret of the precious metals world, the massive disconnect between the paper market and the physical market. For every 1 ounce of real, physical silver that exists in a vault, there can be hundreds of ounces of paper silver traded as futures, contracts, options, and ETFs. These are just digital promises, bets on the future price, and because these paper contracts can be created out of thin air, they are the perfect weapon for price manipulation. What we saw on January 30th was a classic, coordinated paper raid. It happens in 3 phases. First, you have spoofing. This is where large traders place huge sell orders with no intention of them ever going through. These fake orders create the illusion of massive selling pressure, which tricks trading algorithms and smaller investors into selling for real. This isn't some conspiracy theory. It's a documented crime. Major global banks like JP Morgan, UBS, and CIBC have paid over $1 billion in fines for doing exactly this. Second, as the spoofing drives the price down, it triggers a cascade of forced selling. Traders who borrowed money to bet on higher prices get hit with margin calls. Their brokers force them to sell, which pushes the price down even further, triggering more margin calls. It becomes a self-sustaining waterfall of selling and avalanche. Started by the manipulators at the top of the mountain. Finally, with prices in a freefall, the big banks who started the raid can come in and clean up. They cover their massive short positions for a huge profit, or they buy up new positions at artificially low prices, setting themselves up for the next rally they know is coming. This wasn't random market volatility, it was a planned demolition. It was a shakeout designed to punish the average investor, transfer wealth from the many to the few, and keep a lid on the true price of gold and silver. If this sounds outrageous, it shouldn't. This isn't the first time they've run this playbook. We've seen it over and over again for decades. Remember the Hunt brothers in the 1980s? They tried to corner the market by buying up massive amounts of physical silver, and they drove the price to historic highs. How did the establishment stop them? Not by finding more silver, but by changing the rules on the COMEX exchange. They limited how many contracts one person could own and then, in a killer blow, restricted trading to liquidation only. This forced the hunts to sell, crashing the market and letting the insiders take back control. Or how about the silver squeeze of 2021? A grassroots movement of retail investors started buying physical silver and silver ETFs, putting huge pressure on the paper market. For a few frantic days, it looked like the manipulators were losing control as the price surged, and then, like clockwork, the exchanges raised margin requirements, making it more expensive to hold silver contracts. This pushed the small players out, killed the momentum, and sent the price crashing back down, all while demand for physical metal stayed red hot. We saw it in the massive takedowns of 2011, and we saw it again on January 30, 2026. Every time the true price of physical gold and silver threatens to break free from its paper chains, powerful forces step in to smash it back down. They use the futures market as their weapon, a tool of suppression disguised as a mechanism of price discovery. The crash wasn't an anomaly. It was the system working exactly as it was designed to. The system is rigged, but you don't have to be a victim. The events of January 30th proved that the paper price is a lie. True value and real security are found in assets you can actually hold, but navigating the world of physical precious metals can be tricky. That's why we've put together a free, comprehensive guide, The 5 Biggest Lies of the Paper Gold Market. This guide will show you how to tell real value from paper promises and how to build a portfolio of physical assets that can protect you from the next engineered crash. The link is in the description below. Don't be a pawn in their game. Arm yourself with knowledge. Now we get to the most important part of this story. This is the secret hidden in plain sight, the truth that exposes the paper market for the fraud that it is. While the headlines were screaming about a 30% crash in the paper price of silver, something incredible was happening in the real world. Physical silver was exploding in price. This wasn't a quiet event, it was a panic. As the paper price was hammered down towards $80, then $75, everyday people, the ones who know the difference between a contract and a coin, rushed to buy real metal. Bullion dealers were instantly overwhelmed. Their websites crashed, their phones rang off the hook. Within hours, many of the largest dealers in North America were completely sold out of popular silver coins and bars. The U.S. Mint, which had already suspended sales earlier in January due to the wild market, was nowhere to be found. It couldn't operate in a market where the real price was completely detached from the official one. And this is where we see the price explosion. While the comex spot price for silver was quoted at, say, $85 an ounce, good luck finding a 1-ounce American Silver Eagle for that price. You were paying $150, $160, or even more. After sales resumed, a proof American Silver Eagle that sold for $95 before the crash was repriced by the U.S. Mint at $173. The premiums, the amount you pay over the spot price to get actual physical metal, had exploded by over 80%, and in some cases nearly 100%. This is what a market decoupling looks like. The paper price said one thing, but the real world, the world of physical scarcity and overwhelming demand, screamed another. The crash on your television screen was a fantasy, a digital illusion. The reality was a buying frenzy so intense that the entire physical supply chain seized up. This wasn't a crash. It was a run on the bank, and the bank was empty. The explosion in physical premiums was the true price signal. It revealed what the manipulators have been trying to suppress for years. There isn't enough physical metal to meet demand at these fake paper prices. The takedown on January 30th wasn't a show of strength by the bullion banks. It was an act of desperation. They had to crash the paper price because they were on the verge of being exposed by the physical market. So what's the lesson here? What does this all mean for you and your savings? It means you have to recognize that there are two separate markets for precious metals. There is the paper casino, a leveraged, fraudulent system controlled by a cartel of banks and regulators who can and will change the rules to suit themselves. And then there is the physical market, a real-world asset governed by the simple laws of supply and demand. The paper market is designed to create volatility, to shake you out, and to suppress the price. The physical market is your shield against that system. The violent takedown on January 30th, followed by the explosion in physical premiums, was the most powerful validation of owning physical metal we have seen in a generation. It proved that in a real crisis, the paper price becomes irrelevant. The only thing that matters is what you can hold. Your 401k, your stocks, your bonds, your ETFs at their core, these are all paper promises held inside a system that has proven itself to be fragile and rigged. Physical gold and silver are different. They are tangible wealth. They are a vote of no confidence in a failing system. They are your financial insurance policy. Understanding what happened isn't just an intellectual exercise, it is a critical lesson in financial survival. The forces that engineered this crash aren't going away. The debts that forced them to print money are only getting bigger. The next crisis is not a matter of if, but when, and when it arrives, you have to ask yourself, do you want to be holding paper promises, or do you want to be holding real money? The events of January 30th were a warning shot. The mainstream story was a lie, and the crash was a coordinated attack designed to maintain control of a system that is breaking. But in their desperation, they revealed their hand. They showed us that the paper price is a fiction and that the demand for real, physical metal is overwhelming. They confirmed what so many of us have suspected for so long: the game is rigged. But now you know the score, you have the truth. This knowledge is your power. It empowers you to step outside of their fraudulent system and protect your wealth with the one thing they cannot print and cannot fake: physical gold and silver. The future will be volatile. There will be more attempts to manipulate the market. Stay informed, stay vigilant, and stay prepared. If you found this analysis valuable, make sure you subscribe and click the bell icon so you don't miss our future updates. The financial system is undergoing a historic shift, and we will be here to guide you through it every step of the way. And don't forget to download your free guide on the 5 biggest lies of the paper gold market from the link in the description. Protect yourself. Stay free.